Good afternoon. Good afternoon. This is Steve McMillan the first. Just wanted to touch base with you guys again. Sorry we're getting this video post out a little late. However, whenever it does come, it is a learning experience. We have a lot of action going on in the market this week. Had some questions, which I will cover during this session. What I wanted to do is kind of show you guys. Last week we talked about bull put spreads. This week we're going to talk about bear call spreads. And I'm taking a good example from Google. Google reported their earnings this week, and they met their revenue, they met their numbers, the earnings per share numbers. However, they had that fine, the EU fine of $2.7 billion. So that kind of hit their bottom line, so that caused them to fall. And after they report their earnings, after hours, of course, all companies report after hours, so you can't make any plays during the day. So after they reported their earnings, they were down like $31, and they end up falling. What's the day? Wednesday on today about 29. Yesterday, I'm sorry, on Tuesday about $29. And so right now I'm going to use Google as an example as being in the downtrend. So if you take, for instance, right here, we're looking at Google. I pre-populated the credit spread. As you can see, there's a call. We're looking at 3 months again in October, the 980s. And if you kind of look over to the right side, right here, the Google last trade was $947.80. That was the last trade. Okay, so I'm looking out. If we're thinking Google's going down there, they're starting to be in a downtrend. It was an opportunity a few days ago, or yesterday rather, to capture that the 980s, 990. So what we would do, since it's going down, and it's been going down, we would look at them selling the 980 put. So that's the closest to the 947, and which, I'm sorry, it's a calls. Selling the 980 calls, and it's the closest one you're going to sell on the call side to the dollar price. On the put side, if we were doing the puts, we would be going below the 947s like we did the week before. So we're looking out 3 months. Excuse me. We're looking out 3 months, and we're having a $10 spread. So with the spread, you need, for one contract, if it's $10, you have to have at least $1,000 requirement per contract option, per contract. Okay. Had a question last week. What if earlier this week rather, what if we wanted to do a 985 and 990. So that's a $5 spread. So with a $10 spread, if you need $1,000 to cover the spread per contract, you need $500 per spread to cover the contract there. Okay. So I always look at, the $10 spreads. As you can see, the quotes are different. This is negative 40 cents. Range, it's a large range all the way up to $3.50. So I would never go in the market this way and put a market order, because they'll fill anywhere closer to negative 40, and you don't want that. So if we went out, stay at 980 like we had in the beginning. So you'll see it is a large spread still when you have $1.70, which is 170 by 560. So even with that type of spread, I would do a limit credit. More than likely would do a limit credit of, I would put in there about $4.80, and then place the trade and see if it can fill at $4.80, which is $480 per contract that you have in your account. Okay. All right. And that's the bear call spread. So you write a bear call credit spread when the stock is going down. You write a bull put credit spread when the stock is going up. If you guys have been keeping track of Amazon this week, I'm going to go to their charts. When we spoke last week, Amazon was 1,001. Now they're 1,052 as a close, and they're 1,062, up $9 after hours. Amazon is reporting their earnings tomorrow. We're expecting good things. However, like I said before, we never hold. I know I have a few individuals out there holding some credit spreads on Amazon. I never hold a credit spread or any position unless it's a stock. But an option position, I never hold a option position over earnings time. If they go up and we have a bull put spread on and they still go up, and I then closed it out and made my money, then we continue to keep moving and going on to the next play. I don't look at what I could have made. That's fine and dandy, but you need to be focusing on the next trade, and that's what we'll help you do with our alert service. So Amazon's reporting earnings after hours tomorrow. I think they're going to have a blowout quarter. I have a couple individuals that's holding some way far out the money. They may want to keep those in play because they're way $70 out the money. But one of the things I have seen Amazon miss before, and I've seen them down $100. I've seen them up $80 before, and they made their numbers, the analyst numbers that they projected for them. So, it's a 50-50. That's why I don't like holding. One of the things I want to ingrain in your thought process is when you have a profit, you take the profit because you can't go wrong. That's one thing when you're dealing with options. When you're dealing with anything in a trading arena, you want to take your profit and move on to your next play. And that's what we continually teach with the alert service. We look at taking the profit. We give a suggestion of when you can take your profit. If you take your profit, that's fine. If not, that's on you, but we're not responsible for that piece. We will just give you when we're getting out, if you're placing the same trades that we're placing as well. If there's any questions, feel free to inbox us in reference to what's going on. If there's any questions around the bear call credit spreads, we'll get into some additional things, selling puts. Once your account is built up, you're able to sell puts and explain what selling puts are. It's the same premise. You're generating income in your account. However, you have the potential to own the stock. Then you can turn around and write cover calls on that as well. So we have a lot of training, a lot of learning to go through, but with the alert service, we'll be able to do a lot of that for you. If there are any questions, feel free to reach out to us. I just want to kind of put in the Google chart here and let you see what I put goof. Excuse me. Put the Google chart in, did it again, and see what you're going to be looking at and some of the things that we were looking at. Okay. And a lot of the technology stocks during this time had some rundowns, but they had a bounce back very nice. Google had a bounce back very, very nice. And this portion right here is the earnings. Up here, then they just plummeted and fell. So I think that this is really great opportunities to sell puts to sell the put credit spread on Google. I'm showing the calls because right here after earnings, yesterday would have been a great opportunity because you would have been out of the market already. If you'd have sold puts on Google yesterday when they opened up, you'd have already been out of your play here and made a little profit. So I think every time they bounce around, they bounce down, and that's with Amazon. Any of those going out quite a bit out the money, 3 months out. You can always close them out and have that opportunity to sell a bull put spread. Okay, today we were talking about the bear call, just because Google has been down. So you can see right here, when you have this large of a discrepancy, okay, I'm not sure if you see that. When you have that large of a discrepancy in the bid and the ask price, I'm gonna put this up here, just right here. Okay, just trying to get my arrows together. When you have that large of a discrepancy in the bid ask price, 170, 560, that is huge. There's something has been happening, and that is the earnings on Google. So the price is very volatile, and that's when you definitely want to set a limit price, because if you don't, the market makers or traders will place your trade closer to the 170 instead of closer to the 560. And then you're waiting for your profit, and it's a longer time to have some profit. And the longer you go out, the steadier your option prices will be. So you have to have movement. I go out longer term on these very volatile stocks, and so that we'll have time for it to make a correction, to make profit, if you will, and things of that nature. So like I said, we're able to handle a lot of that stuff for you. Again, I'm gonna wrap this up. This is a short video showing you some information, showing you some opportunities on the trading front in reference to credit spreads. So again, inboxes if you have any questions. And we will talk to you next time. God bless. You guys have a good one.